Good evening, everyone. On the occasion of World Investor Week 22, today we brought to you another ANMI WR Knowledge Series 97 webinar on commodities, an emerging asset class and how to take advantage of it in association with DHAN under the Aegis of SEBI. Commodity market have made rapid strides in terms of volumes and open interest in last decade. Since they have been traded actively, and that is why commodity have emerged as a distinct asset class. Today, our speaker will let us know what are the unique features that makes commodities interesting for investor. Now, I welcome our guest of honor, Mr. Kamlesh Shah, President of ANMI and MD at SEBI India Securities Limited. He has 26 years of experience in financial services industries, a chartered accountant by qualification. He has been instrumental in solving broker problems at regulatory level. I also welcome today's speaker, Mr.Jay Prakash Gupta, founder of DHAN. He is alumnus of IIM Ahmedabad and carries with him over 18 years of rich experience in financial sector. He features regularly as a guest on leading business channels like CNBC Awaaz and other media houses. Now I request Mr. Kamlesh Shah to address the audience. Thank you.
Yeah, thank you, Vaibhav. Good evening. We are into World Investor Week. On behalf of ANMI, I welcome Mr. Jay Gupta, my colleague Mr. Vaibhav, fellow members and guests. Asset allocation for portfolio is most accepted practice these days to achieve financial goals. Commodity markets have evolved from barter system to electronic platform. There are three major benefits of including commodity into the portfolio. Firstly, it provides hedging of portfolio. Secondly, it helps in diversification of portfolio. And third, and the most important thing is return from the commodity are independent or negatively correlated to other asset class such as equity and bond markets. The products available for trading and investments are ever expanding for commodities. With the help of technology, a new range of products like energy and other products are available for investment. Today, we are talking about inflation. It is commodity as an asset class can be right solution to be in the portfolio for any investors. The beauty of commodity product is it can never be zero. It will always have value, whereas shares could become zero. Also today, there are various options for investment in commodities like direct investment or through derivative products or like future and options or investment in ETF products and mutual funds, and also to invest in companies that are dealing in commodities. Ideally, 5 to 10% of your investable surplus could be invested in commodity as an asset class. SEBI has permitted FPI to trade in commodities. This will bring in a lot of investment to India in commodity market, and it will help to expand product portfolio, turnover, depth, liquidity of the market, and will open up new opportunity for all the investors. I would like to thank all of you for participation. On behalf of ANMI, I wish you a very happy festive season. Let us now listen to what expert has to say. Over to you, dear Mr. Jay Gupta, to enlighten our investors. Thank you.
Good afternoon, everyone, and thank you for your kind words, Kamlesh Shahji and Mr. Vaibhav Shah. A warm welcome to everyone from SEBI and me, my fellow market intermediaries and listeners. It's a pleasure and honor to be part of this event, World Investor Week, under the aegis of SEBI and IOSCO and organized by ANMI. So before we get into and discuss about the various aspects of commodities market, some of the key insights Mr. Shah has already shared. in his key address. So before that, I'd just like to iterate that Indian market has been the center of attraction across all major markets and has been resilient despite global uncertainties. We continue to remain one of the most sought after investment destinations in the world. We take extreme pride in the way our regulator, market infrastructure institutions, market intermediaries function and have adopted to technology. So we all know that last 3 years have been eventful. So I'll not touch upon the negative side of it, but I'll try to speak about what positive things have happened for the market. The most prominent one has been that we have added more than 6 crore DMAT accounts. And that means we have few crore new market participants who have entered into commodities and capital markets. If we see the demographics, we get a very interesting insight. 36% of 6 crore accounts which have been opened are of people whose age is less than 30 years of age. So they may have entered the market with certain aspirations, inspirations, or certain motive. The underlying objective for all those who enter is to make their investments grow. Or in layman terms, we all come in markets to make money. Maybe their risk appetite may vary. Now, as market intermediaries, I would surely, also feel that Mr. Vaibhav Shah and Mr. Kamlesh Shah will also vouch for this, is that it is our collective responsibility to take care of these new entrants in the market, guide them, expose them to various asset classes available for investing or trading. It's also our responsibility to educate them about the risks associated with each of the asset classes. We have to ensure that the client, especially the new entrants who enters the market with certain objective of making money or to earn returns, actually succeed in this market and they trust the system. That is where our success lies, because after all, the success of a participant makes makes market successful and in turn makes us successful. Now, coming back to the various asset classes, as we know, there is enough of information available on equities, mutual funds, futures and options, over internet, over YouTube and otherwise. But there is also one asset class, which is commodities, which is less talked about and is growing. And I feel we should make our participants aware and educate them all about it as well. With that spirit in mind, I would like to broadly share my views on commodities as an asset class, how it has grown over the years and how one can take advantage or participate in it. To begin with, we need to ensure that all the new participants who have come in markets, they not only understand commodities, equities, currency, mutual funds, but they should also be in a position to take a conscious decision that which asset classes suit them as per their risk and return appetite. So without much ado, I would like to begin my presentation here. So for that, I would just like to share screen. Yeah, I hope it's visible, right?
Yes, sir. Yes.
Yeah. So I'll try to keep it short. We'll try to touch upon the broad aspects so that the participant or the listener gets an idea and feel about how this market is also growing, and they should take advantage of it by understanding more of it, speaking to their own brokers or own intermediaries, own financial advisors, and get an in-depth into it. So my flow of presentation will revolve around two broad aspects. One is I'll touch upon the various developments which has happened in exchange traded commodities in terms of products, volumes, participants, and how understanding commodities helps. So I'll just to share a summary of developments, which has happened over the years. So it all started in India with a humble beginning in 2003, when national level exchanges were recognized and established, and it all started with a futures contract. So when the futures contract were introduced, it was said that the contract size is big, there is only one product available. So there was, the depth was lacking. Retail participants were not keen on coming into this. The people who understood commodities deeply just entered into the contract, and the market size was smaller at that point of time. Then gradually, when it started growing, there was a need felt that, to have more depth, you need to provide more instruments to the market, and in turn, options were introduced. When the options were introduced, there was also a need felt that this market requires depth and serious participation. So AIFs, mutual funds got permission to participate in commodities market. Now, very recently, FPIs got permission to participate. So that shows, the kind of seriousness our regulator, our exchanges are, showing in terms of developing this market. In turn, we have seen that volumes have increased manifold. Now, in last 2 years data, we see that across exchanges, the volumes have at least become 40 times what used to be 2 years back. So there is some sort of interest coming in, and with active participation from FPIs and mutual funds, this market is likely to grow. And just to give you an information that globally, if you see, commodities market are almost 3 times of equities market. But India, the cycle is not the same here, because in global market, the institution first participated, and then later on it came to retail. And India, it's the opposite. The retail first entered, and now we have institution and FPIs who are getting permission to it. Now, once you've understood this, now I need to move ahead, and I'll try to give certain insights on how understanding commodities market helps. So see, we need to understand that we are all surrounded by commodities everywhere. So especially in India, you ask any household, you ask any female family member, be it your mom, your wife, or your sister, your girlfriend, they are aware of what's the gold price. They may not be aware what Reliance is quoting at or what Infosys is quoting at. But if you ask them what's the gold price, they'll be able to accurately tell you it's aaj itna rate chal raha hai per 10 grams. Now, the office in which we are sitting in, the chair on which I am sitting, it's made up of certain metals and plastics, which are all commodities. So commodities is everywhere. It's around us. But, we Indians, we haven't taken advantage of it in the sense that we have seen it from arm's length, saying that, okay, this is commodities, this is fine. But now it's time for us to understand how we can use that asset class, which we use daily in and out, and also make our investments, or we can diversify into that asset class. So to do that, it's important for everyone to understand how it's going to help you, So the very basic thing I'll touch upon is prices for any commodity is demand and supply determined. It's unlike shares where there is certain, valuation, there is certain cash flows, there are certain, technical things which you need to understand in terms of ratios and all. You need to know about the quality of the management, the corporate governance. These are the various factors which are prevalent. But for most of the commodities, it's the demand and supply, and the data for that demand and supply is publicly available. Just to give you an example, if you feel that, okay, last year coffee production was X billion tons, and due to certain bad weather, the coffee production is likely to fall by 20%. This is a public available data, right? So that during season time, you will not have much of the coffee hitting the market. So what this will ultimately result into, there will be shortage of supply. People who have a habit of drinking coffee, they will not leave coffee, or they will not substitute with tea. So a demand for coffee will go up, and hence the price of coffee will go up. Okay, now if you understand that basic data, you can very well take a call whether what should I do? Should I buy or should I sell? Now, the next important point here is commodity like gold has established correlation with economy and industry performance. So when I say industry and economy performance, you need to understand that gold has negative correlation with what is happening in the economy. We have heard it from our parents, that whenever there used to be war-like situation, people used to rush and buy gold or buy silver. Why? Because these are, they have a monetary value and which can easily be exchanged, and in terms of inflation and all, when your value of your rupee or value of your currency depreciates or appreciates, your gold becomes, a kind of, protection against inflation. So for in a scenario like today, where we are talking about there is a lot of uncertainty around, economy may not do well, there is a fear of global recession. In these kind of scenarios, you'll find that there is always better to have some kind of allocation to another asset class which can balance your portfolio. So the other asset class, obviously, when there is uncertainty, negativity all around, the gold becomes an obvious choice. Now, how to invest in gold, whether you want to buy ETF or you want to trade in exchange futures and all, that advice you can very well take from your broker, your intermediary, or your financial advisor. But for any new entrant who is in market, who has seen only 2 years of market cycle, and that too, which was unidirectional, it becomes even more important that when market gets into an uncertain phase, you need to understand what all are the other asset classes which helps you. Now, it helps in diversification. As Mr. Kamlesh ji also mentioned, it gives you a balance in your portfolio. Now, let's understand how it helps in diversification or also in, hedging against your certain price movements. Now, we have seen in last 2 years, we had seen crude oil prices was negative. Now, crude oil prices went above $120. There was a war-like scenario. Russia-Ukraine war is still on. We had seen crude oil prices hitting $120. Now, you understand, if you had position in companies which has crude oil as their important ingredient or important raw material, it's quite obvious that those companies or those stocks will not perform well because their margins will shrink because the raw material prices have almost doubled. So how would you, take crude in commodities market and hedge it? Now, if you have a position, say in paint industry, I'm just taking it for illustration purpose. It's not a recommendation that you should buy those stocks. Is if you have exposure towards paint industry, if you have exposure to our polyester yarn companies and crude oil prices are going up, what does it signify? Either the company will have their bad quarters because of the higher input cost or the higher cost of raw materials. And if you have those stocks in your portfolio, understanding commodities market helps you in doing a better decision making. Either you exit those companies or you can sell crude oil in exchange futures and try to hedge your position which you are holding in your portfolio. Now, same thing can work on gold as well. You feel that there is some negative news coming in when the markets have shut at 3:30 p.m. in India, and there is some bad unemployment news which comes in US, and you feel the next day market is going to fall, and you know that the negative market movement have a positive has a positive impact on gold. You may decide that I may create certain position in gold so that I am partially hedged against the negative opening of the market next day. So this way, understanding commodities also gives you a better clarity in how to design your equity portfolio, how to become a better investor. I'll just take one more example here. Say, for example, copper, right? So copper is an important raw material in host of industries, right? From your air conditioned machines to your fans, to your electric vehicles and whatnot. Now, if the copper prices are likely to go up because of there is certain mine which is getting shut in Latin America, or there are certain European companies who are planning to close their smelters, because there is high energy cost, it's quite obvious, the data is in public domain, that the prices of copper is likely to shoot up because there will be less supply of copper available for certain months. In that case, what you do, you very well can understand that the stocks which are dependent on copper as a raw material, and there are very large companies in India which are, metal intensive companies. Those companies are not going to do well. So you can accordingly readjust your equity portfolio by doing that. So that way, understanding commodities also helps you. Now, when we talk about it's a protection against inflation and adverse currency movements, just take, for example, that rupee was 78 few months back. It's currently trading at 83 against dollar. Now, if you have gold bought in dollar terms, the price of gold is converted into INR, and what you get in market is the price which is available in INR. So your currency's adverse movement, or there is inflation in the market, that gets automatically adjusted in the prices of commodities, be it your metal price, be it your gold and silver. So that way also it gives you a clarity. So overall, if you want to, so for someone who has entered the market late, right, who has not seen last two cycles of 2008 or pre-corona time markets, for them, please understand, market is never unidirectional. What you had seen in last 2 years could be an aberration. Market will always remain volatile. For you, understanding one more asset class gives you that depth, that understanding of analyzing companies from a demand supply macro perspective, and that makes you a better investor. I have seen a lot of good investors, they have a better understanding of how commodities market work. And in today's scenario, it becomes even more important with the way things are shaping up in geopolitical arena, be it your China-Taiwan issues, be it your Russia-Ukraine issues, or how, the next the president who gets a third term in China, Xi Jinping, how he is going to have his own policies, how midterm elections in US on 8th of November is going to determine how crude oil prices are going to behave. Understanding commodities, or at least start learning commodities from today, gives you a better perspective. And I'm sure, by making you aware about certain key concepts will help you in the long run, in having a better expectation and better return from markets. So the whole thought process, which we discussed, is that our whole objective is to ensure that you as a market participant always get a better information, and information which you can rely on. And to do that, ANMI, DHAN, and we all market intermediaries are always there to help you out in your journey of you becoming a successful investor or trader in Indian financial markets. With that, I'd like to conclude my presentation. If there are any questions to be taken, I'm happy to take that.
Members can put their queries to YouTube chat box, please, if any.
Right, Jay Gupta ji, your presentation was very elaborate, and it gave knowledge to the first-time investors. The intention during the investor week was to educate investors, and commodity definitely, as you mentioned, would be a asset class that will be there in portfolio of each and every investors. And with the participation of FPI, AIF, mutual fund, and other people, there'll be larger volume, and it has its unique feature and advantages. And also, you discuss about how to deal with the volatility of the commodity. So we are thankful to you for sparing your time and educating our investors. Over to you, Vaibhav, for your concluding remarks.
Thank you so much, Kamlesh bhai and Jay, for the detailed information about the commodity market and the benefits of the commodity market as a asset class. हम क्या कर सकते हैं और it's must need for everyone portfolio. So thank you so much for the knowledge in this investor week of 22. Thank you so much.
Thank you, Mr. Vaibhav Shah.
Thank
Mr.
you,
Kamlesh,
sir. Kamlesh sir and Vaibhav sir. Thank you very much.
Thank you.
Thank you.